folks, it's Doc's Market Minute for Thursday, October 29th. Something that happens around this time of the year, 4 times a year, we have earnings season. And so we have stocks that are going to be making some earnings confessionals, right? So one of them that came up on this scan that I did today was SBUX. So SBUX is actually coming up tonight after the market close. So after the closing bell, SBUX is going to announce earnings. Let's take a quick look over the charts. And you can see that SBUX, after such a huge move, a lot of these good earnings, whatever comes out tonight, is likely almost priced into the market at this point. And so something else that we want to look at here is the amount of implied volatility. So looking at this chart right now, I have historical or realized volatility in the red, and I have implied volatility in the blue, and you can see that there's a huge differential right now. Implied is implying a big move after today. But if I look at the prior earnings reports that we've had, none of these have really been that big of a deal. I mean, we've had some small little gaps here. This one is a little bit bigger, but I think a lot of this move has already been priced in. You can see that these previous moves had sort of priced in the move ahead of time through most of them. So this might be a good application for an earnings iron condor. So what I've done here is I brought up my analyzer for the simulated position here, and I can create essentially what is a one-to-one reward to risk trade for this. So this is kind of where I like to start out with on these, although if I wanted to, if I had a specific bias, I could bias the condor in one direction or another. We could use ratio spreads on one side. We can also somewhat widen out these strikes. So if we look at maybe selling the 65 and buying the 66, so we could go up one strike on the call side if we felt that there's a little bit of bias here. Now what we've done is we've reduced the amount of credit that we're going to receive for this trade and increase our risk a little bit, but we've given ourselves a little bit more room to work with. And that's the way options are. There's no perfect setup out there. Everything is a compromise. So what you have to figure out is what element of the trade makes the most sense for you to compromise, whether that's risk management or whether it's probability. Now that the market has made such an enormous move over the last couple of weeks, I think now is the time to be looking at non-directional reactions to these kind of earnings setups. And that's today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.